Hey guys, how is everyone doing? It's Wednesday and we did had an amazing webinar yesterday. So I'm just want to cover some things here, before we start the actual video. Here's the Telegram, right? So you can't see, of course, but you've seen the screenshots, what you're missing if you're not inside of here, right? So you can see that there is a lot of content going on, and this is only today. Okay, so there is a lot of content every day. Well, not every day, I can't lie to you, okay, because most of the days we do. So out of 5 days in a week, 3 we do got content, very heavy content there. Okay, updating the market, having a few chat with you guys on the private side as well. So if you have any questions, you can go and privately ask me, and I will definitely, try to help you if I can. Right. So I want to talk about RBA first, and then I want to talk about some data that came in this morning, 8:45 a.m. from New Zealand. What I want to talk about the RBA is that if we look at the Australian dollar against a US dollar chart on this one here, as we can see, it's trending at 0.65 right now, right? 0.65, 350, 0.65, 4, just depends what time you're looking at it. But since yesterday, when we got the RBA, the Reserve Bank of Australia rate decision, it was a pause, but it didn't react on the bearish side. It reacted bullish. Okay, so if we get the 4-hour candle, 1, 2, 3, 4, 5 candles, 4 to 5 candles before, we can see that this was positive. And right now, it has been up more than 600 points. So 60 pips, around 60 pips, 50 to 60 pips. So this is pretty intriguing, right? Yesterday, I've read it down, it will be uploaded to YouTube. So if you haven't been yesterday on the webinar, you can go and watch in a few hours on here. And as we're talking about this, please subscribe to our channel, give us a thumbs up on this video. It helps us a lot to spread this good content with other people on the YouTube platform. The algorithm understands that this is a good content once you give us a like and share this as well with other people. Now, when I was reading yesterday the RBA rate statement, it sounded a little bit dovish. Well, it was dovish, of course. The rhetoric of it was dovish, but the actual thing that made me pay attention was this speech about Bullock after that. Okay, and I have a breakdown this on my Telegram channel. So for those who are not there, I'm just going to read it. What I've in summary. Okay, the RBA policy update suggests it's unlikely to be among the first G10 central banks to cut rates this year, with expectations leaning towards a rate cut in Q3. So. Now, the expectations before were that they wouldn't have a cut. Okay, look at how crazy everything is, right? Because we didn't have anything of before. We didn't have in January. We didn't have anything from RBA, and then now in February, first week, we do have, and it feels like that they are sort of making us understand that they will probably cut somewhere around the Q3 of this year. So in 6 months, somewhere 6 months. Then, the Australian rate market has adjusted accordingly, pricing in a higher probability of the first rate cut occurring in August rather than June now. So it basically gave a little bit of more time. And this is a bullish approach to the monetary policy. So this is the basically reason, same thing that is happening with the Fed. And remember that, I think, I don't know, like 8-9 months ago, you probably can't remember that, I've mentioned that the other central banks will do what the Fed does, and the Fed had a rhetoric to get from March to May the first rate cut. Now RBA came in and say that there was on August from June to August. So there is a time now of difference, okay? Going ahead, positive sentiment towards the Aussie has been indirectly influenced the overnight rebound in the Chinese equity market, where speculation is growing about further state policy actions to ensure stability. Recent announcements include China's sovereign wealth fund expressing its intent to increase ETF holdings, coupled with tightened trading restrictions. So there we have it, why the Australian dollar actually went up and not went down regarding a dovish monetary policy decision. Okay, so this is all from me on the Australian sort of part. I was looking to enter in a long position after reviewing this in a better step, but I didn't have any good opportunity on the chart, any good price to get in. All right. Now let's have a look at New Zealand unemployment and employment data, quarter 4. So unemployment rate was expected to come at 4.3%, much higher than the previous, that is 3.9%. So this is not good, right? Lots of people getting unemployed there. But indeed it came 0.3 less than expected. So it came 4%. Okay, so that's pretty good for the New Zealand dollar, as well as the employment change, quarter 4. It came as higher, of course, it came higher than expected, 0.4, and the consensus was at 0.3. All right, guys, so this is all from me today. Remember that we're going to have a webinar on Thursday as well, 8 to 9 p.m. on Sydney time. So if you haven't been yesterday, this is the time for you to register. $0, no charges, completely free. Just go to ACY website and register into the webinar link there. All right, so I hope I see you tomorrow, and please share this video with your friends. Maybe they want to have a look on what's happening on the RBA. I think this is very insightful. All right, guys, thanks for today, and I see you in the next video.